does history tell us that this looks like when we get closer to that point? Is it yields breaching a certain level? Is it failed auctions? What would you look for to say the time is here, the bond temper tantrum is finally occurring?
Well, it could be seen, excuse me, in either the bond market, the market action. It's by long rates rising relative to short rates. In other words, they're trying to hold the short rates down, and the long rates are rising.
And we are seeing some of that.
And then you're seeing the weakening then of the dollar, and then you're seeing movements such as in gold and other assets. And when you see that rise in rates, then that starts to affect the stock market, because what's happened now is that with bonds going down and stocks going up, the prospective returns now of stocks are now down low relative to the prospective returns of bonds. And so that upward pressure then starts to translate into a stock market pressure. That is the classic dynamic, and something that the Federal Reserve then, or any central bank, is in a position of not easily being able to manage, because it becomes more of a stagflationary environment. So the stagflation that we're seeing right now, the Fed wrestles with the question, if it's tightening or if it's easing. That also has, in a economy where there is such a wealth disparity, but also think about the implications of whether you own stocks or whether you don't own stocks, and that difference. That impact is very different. That has huge political implications.
I say, given
so that's
that,
where that period.
Because this is an administration that has been very explicit in its desire for cuts, and this is part of the reason that Kevin Warsh is now our Fed chair, who of course has said, I am independent. Do you think throughout history there's often been bond markets that test a Federal Reserve chair? Is Kevin Warsh about to get a big test?